today are supportive?
Well, that's right. Let's address, though, the sector that's been on fire for all of this week. Metal stocks, they are seeing strong gains all through the week. That's supported by a combination of factors, macroeconomic as well as sector-specific tailwinds. Let's run you through the top reasons first. The announcement of a provisional trade agreement between the United States and China. That's improved global risk sentiment, encouraging flows into cyclicals and metals included as well. Next up, the positive commentary we got in from Tata Steel on demand outlook as well as on margin stability. That's what's added to a bit of a bullish sentiment, particularly in the steel segment of the ferrous space. Now, the broader markets have leaned towards risk on this week. That's what's benefited commodities as well as industrials. Now, a key driver of the rally is aluminium-related stocks. They have seen a sharp rebound because of the sharp rebound we have seen in alumina prices. Let me explain this to you. Reports suggest that Guinea is considering cancelling Emirates' global aluminium's mining license. Why is this important? Because EGA exported close to 10.8 million tons of bauxite in 2024. Now, around 10 million tons, 10.8 million tons will support roughly around 3.5 million tons of alumina production. Now, this potential disruption has raised fears of near-term alumina shortage. That's what's prompted some pre-buying and also some speculative positioning as well. Because of this, alumina prices have surged more than 10% from the lows that we saw in April 2024. NALCO, that's the one that's doing a relative outperformance. That stands to benefit because it derives a portion of its earnings from alumina sales, which could lift its margins in the near term. So risk on sentiment, macroeconomic tailwinds, as well as for NALCO, well, we've seen a big jump up actually in the last few trading sessions. Alumina, that corrected from around $750 per ton, came down to around $330 per ton. That's currently trading at around $370 per ton. NALCO sells alumina on the open market, while you have Hindalco, that's backward integrated. So alumina price increasing will help them. Vedanta could be the one that gets a little bit hurt because they buy some part of the alumina from the open market. So that explains why we are seeing NALCO do a relative outperformance.
Okay, all right.